Hello again, everybody. Dwayne here from DRFX Forex Swing Trading. Taking a look at the New Zealand US dollar pair. Here we see that the overall scenario of this pair on the daily chart is that of a strong downtrend that started in July 2014. We have then created the pair then created this outer downtrend line as well as this inner downtrend line. And coming towards the end of the year, towards September, we started to see the market break this inner downtrend line and head towards the outer downtrend line. Now, since then, the market has started to move sideways. And taking a closer look, we can see that based on the types of patterns, types of candles that have been formed, it appears as if the market is going to be creating a range setup close to this outer downtrend line. Now, the anticipation of this range setup is based on a certain set of patterns, candlestick patterns, that across the currency market tend to indicate the start of the formation of consolidation patterns. There are several of these signals and patterns, and once you're able to identify them, you can anticipate when the market is going to be forming these types of consolidation setups, ranges as well as pennants. This is an example of what I expect to see on this daily chart for this pair, but across all time frames, you will see examples of this that indicate the formation of consolidation setups within the next couple of days, hours, or minutes, depending on the time frame that you're looking at. So based on those patterns, they are indicating that a range setup is likely to be formed over the next couple of days, couple of weeks, heading into 2016, or in the first 2 weeks of January 2016. Now, the benefit of being able to identify these candlestick patterns and the formation of consolidation is that you're able to anticipate when the trend is going to end. So, even though we see a strong uptrend here and that the market is breaking above this outer downtrend line, even though it's tempting to continue to trade long in anticipation that the market is going to continue higher above this downtrend line, anticipating or seeing the formation of these consolidations will allow you to basically avoid entering at these overbought and oversold positions. So you'll be able to exit your trades. If you are already trading in this direction, then you would stop at this area. You would close your trades at this area here and begin anticipating and looking out for reversal signals that would break this inner uptrend line as well as this outer uptrend line as the market reverses to continue the formation of the consolidation. So that is the beauty of anticipating these formations, especially on the daily chart, which is the chart that controls the lower time frames. What you'll find is that if you're a swing trader and you have anticipated these movements, then you can plan for that next 100 to 300 pip movement with a greater level of confidence, knowing that this is a formation that is going to be formed and knowing when it's going to start and when it's likely to end. For traders who use the lower time frames, even though your targets are smaller and your holding positions, your positions tend to be closed very quickly, knowing the general direction that the market is going to take on this daily chart will allow you to trade more confidently on those time frames, knowing that the market is not gonna take out your positions with unexpected reversals. So for example, if you are in the lower time frame and you were expecting to continue to trade long, being aware of the possibility of a reversal on the daily chart based on these patterns will allow you to avoid unexpected reversals that could take out your position when you continue to trade in this direction. So knowing when the market is gonna start a reversal will allow you to avoid these situations and these traps that tend to take day traders and scalpers by surprise. So once you're able to understand the movements of the daily time frame and the patterns that lead to these reversals, then you can trade in the direction of that expected movement with a greater level of confidence over that 100 to 300 pip range. For swing traders, we can take more advantage of these trades by targeting larger movements But for day traders and scalpers, you can trade several times towards your smaller targets with a greater level of confidence, knowing where the market is going to be headed. So that is the situation on the daily chart for this pair. Based on the patterns and the signals that tend to indicate that the market is going to be forming consolidation, it looks as if we're going to be getting that sort of movement and pattern in the early part of 2016. So to summarize the benefits of this type of analysis, once you're able to identify the types of patterns that are taking place on the market, you can identify when major consolidations are going to be formed. You can anticipate the end of existing trends by essentially anticipating when the market is going to reverse to form these consolidation setups. And you can avoid entering at overbought and oversold areas. The trends might look strong in a particular direction, and you might be tempted to continue to trade in that direction. But once you're able to anticipate when the market has a high probability of reversing, then you'll avoid these traps more frequently. You'll also be able to anticipate when the market is going to be moving significantly over between 100 and 300 pips. And for swing traders, we can take maximum advantage of this by holding one position and exiting at our 200 pip or 300 pip target and take great advantage of these expected ranges. But for day traders and scalpers who take shorter positions, knowing when the market is going to move towards these 100 and 300 pip targets will allow you to avoid sharp reversals and take advantage of the movement in this expected direction and trade with greater confidence, knowing that the market is going to continue in that general direction, and you can avoid these reversals without fear of reversals that can take out your position. So that is the situation on the daily chart for this pair in a nutshell, as well as the advantages that you have when you're able to anticipate the formation of these consolidation setups.